Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 27th of January 2024. And we're publishing our gold and silver weekly update for the week ending the 26th of January. Gold was down last week, but silver was up. The question is, has the precious metal rally run out of steam? Or is it only just consolidating for a brief moment? Well, to answer that, let's take a look. Okay, before we look at prices, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. Placed a link in the description box and comment section below for those who have not yet joined that channel. Now, gold fell $11 last week, falling from 2030 to $2,019, having been as high as 2038 and as low as 2011, a fall of 0.5%. Now, last week we predicted gold would trade between 1980 and 2090, and frankly it moved very comfortably within these figures. In sterling terms, gold was down £8 at £1,590, and in euros it was down €2 at 1,861 euros. Now, silver actually rose. It was up 19 cents, moving from $22.62 to $22.81, having hit a high of $23.05 and a low of $21.94, a rise of 0.8%. Now, last weekend we forecast that silver would move between $21.75 and $23.75, and once again it did this comfortably within the range. In sterling terms, silver was up 17 pence at £18, and in euros it closed at 21.04 euros. That's up 0.27 euros. Gold to silver ratio fell from 89.7 to 1 to 88.5 to 1. For the silver pumpers, who for many years said to expect the gold to silver ratio to reduce to 14 to 1, those who've listened to this channel for years will remember these stories. 14 to 1 being at the time approximately the level at which silver is extracted out of the ground compared with the volume of gold. Well, 10 years on, we're still waiting for that 14 to 1 gold to silver ratio. Something we predicted probably would not happen in our lifetime. Bitcoin currently stands at $41,762, almost literally unchanged from last week. I think it was about $7 difference, though it has been around $2,000 lower during the course of the week. Equities were up, some indices touching all-time highs again. The Dow Jones up 246 at 38,109, the S&P 500 up 54 at 4,890, and the Nasdaq Composite up 145 points at 15,455. Even the good old FTSE was up 174 points at 7,635, though it was a laggard compared to the other indices the previous week. Unfortunately, though, oil prices were also up. Brent crude up $5 at 83.55, and WTI crude up $4.60 at $78.01. Dollar index also up, everything's up, at 103.43. Now, last week we saw relatively robust economic data coming out of the United States, despite what the politicians seem to be suggesting. US economic indicators were not as far into negative territory in December as they were in November, minus 0.1% compared with minus 0.5%. Flash services and manufacturing PMIs for January were higher than anticipated. New home sales were up some 50,000 in December compared with November, and personal spending was higher at 0.7% compared with 0.4%. The important news we said to watch out for were the PCE figures, which is another measure of inflation, on Friday, which were broadly as expected. But the market took this as very positive news. You see, the result of the figures on Friday meant that core PCE inflation rises at the slowest rate since spring of 2021. The rate of US inflation based on the Federal Reserve's preferred PCE gauge rose a mild 0.2% in December and pointed to smaller price increases in 2024. Inflation did pick up a bit at the year end after declining in November, but there's little evidence of emerging trouble. The increasing prices in the 12 months ending in December was unchanged at 2.6%. Now, the core rate of PCE inflation, which the Fed gives even greater weight to, also rose 0.2% last month. Economists polled by the Wall Street Journal had forecast a 0.2% increase. The yearly rate, though, of core inflation slowed to 2.9% from 3.2% the previous month year on year, to mark the lowest level in almost 3 years. The core rate, you see, strips out food and energy costs, as this is seen as a better predictor of future inflation. Food, and especially gas prices, can swing widely from time to time. Nevertheless, in real terms, it does have an effect on our pocket. The Fed is all but certain to cut interest rates this year, but the strong rate of growth in the economy could discourage the Fed from acting in the next few months, as had been widely expected. Many commentators were predicting a cut in rates in March. This now appears very unlikely. Strong growth could keep upward pressure on prices and delay the return to 2% annual inflation, Fed Chair Jerome Powell warned back in December. Now, looking ahead, Jay Hawkins, senior economist at BMO Capital Markets, said, quote, easing core inflation that should set the stage for Fed rate cuts later this year, end quote. Now, we should also be mindful that in the fourth quarter, GDP preliminary figures exhibited robust growth at 3.3%, surpassing the projection of 2%. Now, this coming week, though, we have consumer confidence figures for January due on Tuesday. We have the ADP employment report on Wednesday, final manufacturing PMIs on Thursday, and the non-farm payroll report on Friday, as well as consumer sentiment for January. Markets are expecting the non-farm payrolls to report 180,000 new jobs for January, compared with 216,000 for December. But naturally, all eyes, though, will be on the Fed's interest rate announcement on Wednesday. And I would argue, more importantly than the actual figures, the expressions of views by Fed Chair Jerome Powell as to when interest rates could reasonably start to come down. Because no one really expects any change in the Fed funds rate. But what is said about future rate movements could indeed have a major impact. Now, what else may influence markets and precious metal prices? Well, earlier today, we've heard that the US has fired on Houthi missiles following an attack on the ship carrying Russian fuel, the Trafigura. The US administration stated that it had to hit the anti-ship missile as it posed an imminent threat. So geopolitics should not be ignored. So what's likely to happen to gold and silver prices this coming week? Well, many analysts believe gold is consolidating ahead of next Wednesday's Fed meeting. Prices are yet to complete a swing low. They add that silver, though, has completed a swing low after testing the $22 level. More back and forth price action into next week's Fed decision is forecast. Unless something unexpected happens or geopolitical climate worsens, we're very unlikely to see gold move out to the 1950 to 2150 bracket over the next few weeks, and silver will vacillate somewhere between $21 and $25. This coming week, though, we are expecting some reasonable movements or vacillation, which is why we're forecasting gold will trade between $1,975 and $2,075, with $1,950 and $2,100 as outliers, and silver to trade between broadly $22 and $24, with $21.25 and $24.75 as outliers. What do you think? Where do you believe gold and silver prices will move and then end up by the end of the week? Let us know your thoughts. Thank you so much for listening. We would appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign. As announced at the start of the video, please pop on over to Finances Do Matter. And as always, have a safe, enjoyable weekend and a prosperous week ahead.